Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Wednesday, right before Thanksgiving. I'm going to be off tomorrow, and probably not going to be broadcasting on Friday, but we're definitely going to be broadcast. We're definitely doing it today, and I hope everybody is, getting ready for that big turkey dinner. I know I am. I'm headed on down to Houston, so we'll see what the deal is. But without further ado, let's get into the slides for Dallas Trading Floor. By the way, if you want to see this episode, super easy to do. You can go directly to the episode by going to www.bit.ly.com/DTF429. That's the number of the show. And so happy Thanksgiving, everybody. Hope everyone is doing well out there. Okay, well, here we go. Basically, what is happening is here is the market today, and it is basically off a little bit on the Dow, up just slightly, kind of even on the S&P. The NASDAQ is up just slightly, and the Russell's off. So kind of a flat day. Not really a whole lot going on here, but definitely looking pretty good. In terms of the market. So basically, with that said, let's see if we can figure out if we can make some money. That's always the key. Can we make money in the market? Here's kind of what I'm doing right now with a small portfolio. And by the way, you can get access to the small portfolio by going to www.dallastradingfloor.com. And that can be a very, very good thing. By the way, if you're watching on TikTok, you can go directly to the show. No problem at all. It's bit.ly/DTF429. So a very good thing to go there. Here's what I've got in the small portfolio right now. Ford, I'm up 15% on that, holding it 28 days. It's 71 days till earnings. I have a stop loss set at 1925. Up on that, pretty good little profit capture. The shoe carnival, one of my favorites. We've held this for about 3 weeks, up about 14%. Rambus, this of course is a chip company that probably nobody has ever heard of, but it's a good chip company. Nevertheless, held this for 8 days. We're up about 6%. Tilly's, this is a retail company. We're up about 2% on it in 9 days, 7 days of earnings. We're probably going to be selling this one. We don't want to go through earnings, and we want to have at least 10% into earnings. We just don't want to do it any other way because this can pull back. We don't want to give up our profits. And NXP Semi, it's down a little bit. I've only held it for 2 days, 68 days till earnings. We'll see if this one strengthens. I hope it will. But those are the stocks that I currently have in the small portfolio. Not all my stocks, but stocks that I have in the small portfolio. Here's a stock that I've added today. It's called Micron, and you might be interested in this one. This is sort of an early buy point. It's above that very, very critical 200-day line, and it is starting to see a nice flag pattern. That's why I added it here today. It's up 80 cents. We'll see what happens. Tremendous earnings, composite rating of 94, EPS rating of 95. Relative strength's a little bit weak on that 77. It's the group is could be better. SMR rating A, and the accumulation is A. I think a lot of funds are accumulating this one. By the way, if you're looking on TikTok, I'm showing all of these. I'm showing all these charts. All you have to do is go either to my profile, click on the link that says beacons, and you'll be able to see everything. And by the way, after the show, of course, you can see the recap. But I can see your comments, but I can't show you the charts, unfortunately. I can only do that on YouTube and several of the other platforms. So we will get to your questions. Here's a really interesting covered call play that I did today. It's on Nike, NKE, Nike. I guess that's the proper way to say it. Nike. This one should yield a profit of approximately $614 in 23 days. I hope that'll work out. But Nike has tested. It's moving up nicely. basically the way this works is, and it's kind of an expensive thing. I'd like to do these with my spare capital. You buy 100 shares of Nike. I bought 100 shares this afternoon, and I paid 127.11. That was the price I paid. And then you immediately sell a contract to buy them back from you at 175. That's what I did. December 17th. This is the December 17th contract for the 175. This is the option that I selected, December 17th. So there's 23 days to go. And I received a premium of $325 for this. So hopefully this stock by December 17th is at or above 175. And it's looking pretty good because it's also already at 172 in a fairly good chart pattern. So hopefully this will work out. And if it does, the total profit will be $614 or a return of about 3.6% in a period of a little bit less than a month, a 57.1 return. Now, if you want to get more information on this, super easy to do. Just sign up for the action trailers. I'm going to be sending this out tonight. The action trailers, very, very easy to do. Just go to www.Dallas Trading Floor. So, and just that's where you sign up for it. www.Dallas Trading Floor. This is free, and I'm going to put out this one tonight. This is the covered call play on Nike. So, hopefully that will be of interest to you. I hope so. I'm definitely in it. Now, I do have my other stocks that I do. I kind of want to go over everything that I have before I get to the questions. And here that is without further ado. Basically, I'm still in Robert Half. I've been in it for a while. It's up a little bit today, 23.23%, not a lot, but it just keeps on trucking. So I'm liking that. The QQQ Trust, and of course, this is where I hold my ready cash, the cash that I'm going to be using in less than 270 days. That's where I hold it. It's up today, $1.42. Ford is up today, 9 cents. Not a lot, but I really like Ford. I've been pushing the stop loss up. Tesla has regained some ground. I did take a little bit of profits on Tesla. I kind of reduced my position. I took some profits. I basically was in at 1050, sold at about 1075. So not a lot of movement there, but I did take some profits on Tesla today. I'm going to see if it pulls back. I'm probably going to be back in. The volume's down. We're right before the holiday, so not much going on there. Shoe Carnival, it's down a little bit, but I'm still really liking the stock. I'm just hanging in there, pushing my stop loss, seeing what's happening there. Up on Rambus, I own that one as well. TTD, this is the trade desk, kind of a Google replacement. It's up strongly today, about 3.33%. Nike, this is the one that I bought for the covered call, just up slightly, not a lot, 4 cents, but I think this one is going to go sideways. And if it does, if it goes sideways for about a month and closes at or above 175, this will make a profit. So very nice, very nice trade there. Tilly's, of course, I'm probably going to be selling this into earnings. Definitely something that you want to look at. Also, Apple, that's up today, which is very nice. Nvidia, it's up today a lot. It looks like Nvidia is starting to reverse higher, hopefully towards the end of the year. PXD, this is Pioneer Resources. I've been doing very well with this one. It's up today. Just bought this one, and I think the oils are going to have a nice run into the end of the year. And, of course, we're talking about MU, and that's Micron Technologies, and that's up today too. So kind of running down sort of what, sort of what I have out there. So if you want to get more information, you want to get onto the list for the action trade alerts, super easy. Just go to www.Dallas Trading Floor and sign up. It's free, first and last name, and we'll get you on the list for this great covered call trade for Micron Technologies. So covered call trade for Nike. So that will be hopefully looking very good. So let's get over to some of the the comments and questions, and thanks everybody for hanging out here. Hey, happy Thanksgiving. Your thoughts on CLV and CRM? Now, I was stopped out of CRM. Unfortunately, I was stopped out of it just yesterday, and that has been kind of an issue for me. I mean, I really like the stock. I did get just almost broke even on that one. Not really the best trade, but let's take a look at the CRM chart to see kind of if there's anything, if we can get back in, what we can do with that. So let's go over to the daily. Let's go over to the daily chart here and take a look. Okay, so there we go. Okay, so here we are on the daily chart for Salesforce. Unfortunately, I was stopped out. I don't know if you can see this on the thing, but I was stopped out at 291.73. Unfortunately, it's fallen lower than that. It didn't get support really. It's getting some support at the 40-day line. We'll see if it bounces. But here's my rule on this, and I'm pretty strict on this rule, and that is, if a stock moves below 7%, or if it moves below a major index line like the 40-day line, I typically will sell it, even though sometimes it will bounce and move higher. And I just kind of take my lumps that way. The way I like to buy is as they are reversing off of any of the index lines. Right now with Salesforce, it looks like it's getting some support at the 40-day line. This is where, if you can see it on here, this is where my stop loss was, right about 292. It fell below that. It activated the stop loss, and now it looks like it may have bottomed, but who knows? But here's the danger with this particular stock right now. We're coming into earnings on this one. You don't want to hold it unless you are up 10% or better. You really don't want to hold it, even though it has a great 89 rating, which is very, very good. But if you don't have 10% profit on this one, you want to be careful. It's moved up 5% from the buy point in 45 days. We're coming into earnings. We're very close to into earnings. So this is kind of an area where you want to be careful. So here's what I would say. This is probably not a buy right at this point. I would wait on this one. If you're in the stock, you're up more than 10%, great. I would hold it, don't sell it. If, on the other hand, I was up less than 10%, I would consider selling this one into earnings, seeing what happens through earnings, and then possibly buying it back. I wouldn't hold this one through earnings if I had less than a 10% on it. So it's looking good. The stock is testing the 40-day line. We may see a bounce here, we may not, but the problem here is we're very close to earnings. Earnings are in 6 days. We want to be careful coming into earnings. So let's take the next question. Thank you very much for taking a look at that. Let's look at CLV. And that is, I think it's Clover Health. CLV. I haven't seen this one in a while. CLV. See if it. No, I'm not getting anything there. CLV doesn't seem to be coming up, but CRM, I think if you're up more than 10%, I'd hold it through earnings. Otherwise, probably not. Okay, thanks for holding on here from TikTok. We have a number of people here on ChargePoint. That's interesting. I haven't looked at ChargePoint in a while. I did have Blink charging, and I did sell it. But let's look at ChargePoint for this person on TikTok. By the way, unfortunately, I can't show you the chart on TikTok, but I could show it to you on YouTube. So if you go to my YouTube, the Bitly, just go to this Bitly address right here, and that will give you the ability to basically see all the charts and everything. So let's look at ChargePoint. CHPT, of course, is the symbol for ChargePoint. CHPT, and look at ChargePoint holdings. Unfortunately, I wish I had better news here, but this is currently in a downward trend, It did break through the reversal line, but it was too much pressure, pulling back. Relative strength of 35. Here's what I think you want to do in this one. I just think you probably, if you're down more than 7%, I think you want to sell this one. The checklist is decent at 67%, but in general, I think that this is just not looking as good. It's quite a bit. It's going to be forming a base probably. It does have the last base was quite a while, so almost a year ago, and it's up from that. But really, I think right now, this one you just probably want to leave alone for a while. It is trading above the 200-day line. It is starting to get some strength, but right now, I just think that you just got to. You can't really buy this one. This is not viable right now, and I would be super careful on it, just because. So ChargePoint CHPT is not viable not viable currently, and that's really kind of that's kind of really the long and the short of it. It's really not viable at this level. It's just too far down. We need to see more strength. I mean, it has moved above the 200-day line. That's good, but I just want to see either another base form or just more strength. So I would be watch listing this one right now. I would not be a buyer of ChargePoint right now. Just wouldn't be a buyer of ChargePoint just because it doesn't look as good as everything. And Mark says, Happy Thanksgiving. Happy Thanksgiving to you, Mark. I hope that you're going to have a great turkey day. I know that I am. Let's see. Let's take a look at Nvidia. NVDA. Here we go. And this is one I'm in, and we got a nice bounce on Nvidia off of we got a very nice bounce on Nvidia off the 10-day line here. So that's looking good. That's kind of where I was hoping to get some support. We definitely got it there. It does look like we're in sort of in a tight pattern right now with Nvidia. What really has to happen is it really needs to move. It's sort of in this very tight area here. I do think, though, it is tested all the way up to 350. If we could move past about this 330, 335, I think it's going to move higher. As you can see, these are my buy points where I bought, and I'm still in it. I still like it. It's got a relative strength of 98. It is extended right now, so this is probably not the best place to buy it, unfortunately. It is extended. Currently, it's up $2.2% for the day, but on the week it's down, and on the month it is up. So on the month it's almost up 30%, which is amazing. It's a little bit down for the week, but it seems to be regaining strength. This has got a 100% checklist, folks. So Nvidia is still one of the best. It's one of the best to buy, absolutely, with a 100% checklist. Unfortunately, you can't buy it at this particular level because it's extended. The true buy point was a consolidation buy point at a pivot of 230.43. So we're quite far above that at 326. So here's the problem that I see. If you're in it, I think this is a great place to be in it. I wouldn't get out of it. We've got a long way to go before earnings. We just came through earnings. They had excellent earnings. But one thing is right now is it's extended. This is not a good place to get into the position. You need to hold for a little bit of time on that. But this has a very strong relative strength. If you're in it, I would stay in. I would say not a good time though to initiate a position in. Not a good time to initiate a position in Nvidia. It's just a little bit too extended to do that. Let's take a question from TikTok. All right. Cannot see what you see. Okay, I have to explain this, and this is kind of, you have to listen to me. You need to go to this address right here, because this is where you're going to see it's https://bit.ly/DTF429. And the reason I cannot broadcast the charts, I wish I could. I'm going to try to hopefully get get a situation where I can actually broadcast the charts above my head. But right now, what you have to do to see the charts is you've got to go to this address. But thank you very, very much for that. And you'll be able to see. Okay, let's take a look at Apple and see kind of what's going on there. And I'm going to pull up the Apple charts. And let's do that right as we speak. All right, this is the chart for Apple. And I'm looking at the weekly chart. I'm going to go over here to the daily chart. Let me see if I can zoom in a little bit on this, because this is a little bit hard to see. Let's see if we can do that. So I'm going to see if I can zoom in. All right. This is about 133%. So there we go. So I think this is going to let us see a little bit more. This is on the weekly chart. We're right above the buy zone on Apple. I want to kind of go back over to the to the daily chart. We're right at the top of the buy zone for Apple. It is still actionable at this point. There's a lot of interest right now in Apple. We finally come through this base period, and it is actionable. So right now, it's got 100% checklist. Apple has 100% checklist, and we are about 6% away from the pivot. So we're just outside of the buy zone, but you can definitely buy it here. It's a little bit high, but 6% in 6 days. This is not a bad place to buy Apple. So here would be what I would say for Apple. Apple is buyable at this level, and this is definitely an opportunity. So Apple is buyable at 161. So really, what I'm trying to say here is that at 161 we can still buy it, but if it gets too far above this, then we're going to be in a situation where we can't buy it because it's extended. What extended is typically is more than 5% away from the buy point. The buy point on this cup with handle formation is 153.16, and this blue section in here that I'm showing you, that is the buy zone, and we're right at the top of the buy zone. You can definitely still buy it. It is looking very good. Relative strength is 89. So coming into the end of the year, this might be a good stock to start moving into. Is Apple, because it has a very good formation right now, and it looks to me like it is going to go higher into the end of the year. So that's kind of what I'm seeing for Apple. So it's looking very, very good. All right, and Mark asked again for PSTG. Let's look for PSTG. All right. Pure Storage. Wow, look at that. Wow, that's incredible. Thanks for bringing this up, Mark. That's another good call. You have a good eye for these. Here's the thing with Pure Storage. The storage REIT sector has been very, very strong. There's another one called Cube that you might want to look at too. It's gapped up. I love to buy gap ups, but right now it just came through earnings. And let's look at the fundamentals on this one. Boy, look at that. It really moved up on the earnings. Their sales were up 37%, but their profits, and that's the key, were up over 1,000%. That's amazing. So they must have really done something right in this quarter. So I can see why people are interested in this REIT. Look at this. Look at their return on equity. This is quite impressive. It's 7%. Their cash flow, they've got a positive cash flow, which is not a growth stock. So this is looking, so even if you just want to buy it just for the income, this might not be a bad idea. So Pure Storage is looking very good. Now, would I buy it at this particular level? Well, I would be a little bit careful about buying it here. It is extended. It is extended. So I kind of want to show you that how that's looking. It is extended. It's up 13% today. And unfortunately, or fortunately, depending on how you look at it, it's up 13% from its pivot 18 days ago. So it is definitely being very strong. So what I would say with this one, I think what you have to do with this one, Pure Storage, is I think you're going to have to wait for it to pull back just a little bit and adjust. But if it pulls back, I think then you could buy it. This is a little extended, so I would be careful about a buy here. I would definitely be careful about buying it at these as extended. So Pure Storage, PSTG, is extended currently. But, is viable if you wait for a pullback. And it may not pull back, so that's the problem, to about 30. So this may or may not pull back because this is a very strong movement. But typically when a stock gaps up like this, it will correct down, and then it will correct down possibly to, and it possibly, if it corrects down to about the 30 range, that might be a very good place to get in. It's still a little extended there, but not a bad place. This is a very good stock. This has a tremendous checklist. Look at this. It's 100% on that checklist, 100%. So that is a very, very good thing. It right now, the optimal time, of course, to have bought it would be when it came through the pivot at 27.48. That was basically at the beginning of this run here. What happens? It came through. It moved up about 5%. It came down and tested the 21-day line. As you'll notice, it came down. Oops, let's put that in. Yeah. See it came down, it tested that 40-day line, and then boom, it just went up on those earnings. So this would have been a tough one to buy because typically you don't want to buy into earnings. You don't want to buy into earnings. You want to wait until after. This one, if you'd waited till after and you could have gotten into it. But you notice here, this is how it came through earnings. The earnings were excellent. Boom, it just gaps up from about 27 here to 29. That's a lot of gap up, and then it moves up, but now it's starting to correct. As you can see, it went as high as about 32, and then it's pulling back. So if it pulls back down to about 30, that's where you might have a very good entry point on this. Really like this stock. I really like this stock, Mark. Very good choice, and yeah, that's looking very, very, very good. All right, let's look at the XLE. Now the XLE is a REIT. And so it covers energy. So basically what it is the energy select. It's the REIT for energy. Now, I do have one. Currently, I only have one energy stock right now, and that is Pioneer Resources. That's the only one I have. But this is a great way to get exposure to the sector. This is a REIT that covers the sector. It's currently in a buy zone. So this is not a bad buy here. 85 relative strength. We have declining amounts of people that are willing to sell. It's pushing the price up. We tested the 40-day line. This is looking like a very good entry point for this stock. So I think definitely with XLE, XLE is viable right now. So that's what I would say about the XLE. It's definitely viable right now. Here at this level, it's looking good. It made this test. It's moving up, so looking very good. If you want a ETF that's probably going to do well into the end of the year, take a look at XLE at the 57.98 price that it is right now. It is viable. It is an ETF. It covers a number of stocks, and I think it's looking quite good. So that's definitely something that's definitely something that I would definitely look at. Now let's look at Zim. This is a container shipping company that has been it was making this beautiful base pattern, and then it kind of, I don't know, it just there was just a little bit of a pullback here, and it just seems like it seems to be um, getting a little bit of resistance and coming back down to the 21-day line. The question is, what can you do with it? I bought a full position on the 19th here. I bought a full position at 58.22, and as you can see, I'm off quite a bit on this. I was stopped out of this. I was stopped out of this. I bought it as it was moving up, and it got resistance, so I got stopped out right here, basically at the 21-day line. It tested the 21-day line. Now it's reversed. So this may be a reversal. I may be back into this one. That I cut my losses very quickly when they don't react right. I was stopped out of this one, but this one might be available to get back into. It's got 100% checklist, so that is looking very, very good. It's basically it's got about 12. It has got to make about a 12% move to the pivot, which is the actual buy point. That's the 62.20 buy point on it. So it's got to make about a 12% move from about here to here in order for it to get up to. I do think it's looking kind of like it's getting some nice strength here. So this one, I may take another try at this one. I may take another try on this. This is still in a very good base on base formation. So this is looking really good. So here's what I would say with Zim. With Zim, this is not a bad entry point. Even though I was stopped out, this is a good potential entry point for Zim. And really, so this is really a good potential entry point for Zim right here, because it does look like it's getting some support right at that 21-day line. So it looks pretty darn good. So I definitely like this one, and I think that you have a very good, that one you could definitely buy. Zim, you could buy that. You could do that right now. Right now. Okay, let's see. Mark G. Starting a new smart folio account. $500 option Starbucks. Okay, what do you think of any of my diversification? Here's the thing. I would be a little bit. I like Starbucks, not so much with Facebook. I'm just not sure what's going to happen there. This is not bad. MRO. This is a marathon, so this is looking pretty good. I'll try to cover that a little bit later. Jaden wants to look at Upstart. Let's look at Upstart. And Upstart, as you know, is one of the AI companies that does for credit scoring, and very interesting. Now, it does look like it's getting some support at the 200-day moving average, but I do not like this chart. This is a bad chart. It is a downward trend. We may have gotten some support at the 200-day line here, but in general, I just can't recommend this one until it reverses. It's given up all of its movement from the buy point, the 191.98 buy point. It went all the way up, and it's given all back. So hopefully it gets some support here. It does look like that's the case. It does look like it's getting support at about 191. So if you want to throw in again for this, maybe that would work. It's got a very strong relative strength. But the checklist is only 67. So here's the thing I would say. I would wait on this one for it to confirm its reversal. So that's sort of my, take on it. So, for Upstart, wait to re-enter. Just wait to re-enter this one, because it's just, I don't think this is it's not a good trend, and I like the stock, but I think you got to wait on this one. Don't buy this one right now. It's it's just not in a good trend, and it's got a downward trend. So I think you got to wait on this one until it, starts to see some movement up. So just, I wouldn't buy this one right now. I think you just gotta wait on that to re-enter it. Let's take a look at some of the questions. What is a full position? Great question. This is a question coming from TikTok. And what a full position is, let me kind of show you my small portfolio. The reason I do the small portfolio is to kind of help people along, kind of, what in the heck is a full position, and why is it important? Well, let's see if I can let's see if I can make that case for you. So let me just go and pull up the small portfolio like we had just a second ago, and this is the small portfolio that I am currently trading. But let me just show you what a full position is, because I think that's kind of an interesting and very important concept in what I call position trading. And that is, imagine your portfolio as a pizza. You see, this is kind of like a pizza. You would go there. So in order to minimize risk when you're buying, you buy a position at a time. You buy 1/8 of the pie every time. That's considered a full position. So by buying 1/8 of it, by buying a 1/8 position and setting your stop loss at 7% below where you bought it, the maximum amount that you can lose on a position is 1 to 2% of your overall portfolio. And so this is why I recommend doing it this way. I recommend using a spreadsheet to find out how many positions. So the spreadsheet's really easy. You just add up the total value of your portfolio and you divide it by 8, and that will give you 8 full positions. Each of these positions, then, when you're buying stock, you just buy the amount of this of this 8. So let's say, for instance, we had an $8,000 portfolio. We divide it by 8. We have $1,000. We have $1,000 in each position. So one position equals 1,000. So if we were to buy a stock that cost, let's say, $10, that would be 100 shares of stock, or $1,000, or one full position. And the reason that you do it this way is because you can easily graph it like this and see what your exposure to any one thing is. Now, what I do is, once I have exposure, I then either add or subtract from that position. For instance, with Ford, if you look at Ford, you'll notice it's almost one position. It's not one or 1, 2. It's almost one position. I'm up 15% on this. My stop loss is at this level. So even if I get stopped out of this, I will still make money. But if I just came into the position initially and I was stopped out, the most I could lose would be 7% on this one position in Ford. But overall, that would be 1 to 2%. So that's really what position trading is. And I know that it's a little confusing sometimes for most people, but it's a tremendous way to trade. I need to put out some videos on how to do this, but this will protect your portfolio a lot. So you've got to be, this is one of the ways that you can definitely protect your portfolio. Let's look at BIMI, BIMI, real quick, and see if we can pull that one up here real quick. And let me do that. All right. Going back to the charts here for BIMI, and pull that up right as we speak. So this is BIMI International. It's a Chinese provider of health products. This is what they call a penny stock. Okay, it's less than $1. Typically, I don't like to buy any stocks that are below $1, and this one in particular is quite bad because look, it's in a downward trend. So it's trading below the 200-day line, and it's got a relative strength of 5. It has a very bad checklist at 33%, not what I would buy. On the technicals, it's up just 0.3%, which for a stock like this is nothing. Over the last week, it's gone down 17%. Over the last month, it's gone down 14%, and it's basically even for the quarter. Year to date, it's gone down 56%. So here's what I would say on this one. Don't waste your time. Don't waste your time on this stock. This is not a good stock. Don't waste your time on this stock. I know there's a big allure of penny stocks, but this one is not. This is probably a loser. BIMI. I'm not. So I would be super careful here. I would absolutely not be in this stock. It's just not what you want to be in. I mean, this is not a good stock. So I wouldn't waste my time in this stock. It's a penny stock. I know there's a lure. Everybody thinks that penny stock. I can buy, I can buy 100,000 shares, or I can buy 10,000 shares. It goes up a penny. I'm a millionaire. But it just doesn't work that way. Typically, with a fund, they will not buy a stock that's below $10. There's a few exceptions, but it's just this is really where you want to be. So I wouldn't buy this stock. I would I would just avoid it at all, not at all costs, but I would just avoid it. It's just a place to avoid. Let's look at AMD, and this is one I'm holding. As you know, I like AMD. I think I'm still. This one, yeah, okay. No, I'm out. I sold my position. It's up again. Probably time to start back into this. I did take profits on AMD. It's still looking good. It's still trading above the 10-day line. We've come through earnings, and let's take a look at the weekly chart. Let's kind of look here. Yeah, we had great earnings. Look at that. Wow. Look at this. Look at this. Now, by the way, this is what I call my radar. This is kind of the fundamental. This is what they call fundamental analysis, and it's sort of my radar on the stock. There's two kinds of analysis that we can do: fundamental analysis and technical analysis. Now, most of the time I talk about technical analysis, but I'm going to talk about fundamental analysis. This is the kind of thing that you get in your classes in college. They take a long look at technical analysis. It's very useful, but it's not useful for trading. It's useful to see what stocks to buy, but it's not necessarily useful to see where to buy them. And there's two separate things. But let's look at Advanced Micro Devices, AMD. This is an absolute leader. It's in the electronic semiconductor fabless number 2. This is the number 2 out of the sector, out of the economy. Money is flowing into this, not only into this issue, but into this area. Take a look at their sales: 53% up, 93% up, 99% up, 54% up. This is a strong stock. Also, it has a relative strength against all the other stocks in the stock market of 97. That means this is in the top 3% of all stocks. So this is what you would consider an elite stock. Let's look at the checklist. This has an 100% checklist. It checks all the boxes, and it definitely is. The only problem right now with this stock, and there's no, the only problem with this right now is that it's 38% above the buy point. Typically, you want to buy a stock up to 5% above the pivot, but no more. And the reason is because these will pull back typically and test. So the only problem right now with AMD, and it is a great stock, is that the stock is currently extended, and that makes it not an optimal buy point. So on the fundamentals, this passes with flying colors, but on the technicals, it doesn't. So the stock is 38% extended from the buy point. I know I'm getting very technical here, but this is a great stock. It passes on the fundamentals, but it doesn't pass on the technicals. So here's what you want to do when you run into this situation. You want to wait to find an optimal entry point. You want to wait for this to rest here. So right now with AMD, you want to want to watch list, watch list AMD and wait for a good entry point. So it's not enough. It's not enough to just buy a stock, the right stock. You must buy the right stock at the right time. And basically, here's how you do that. You look to see if the stock has good fundamentals, which AMD blows the water out in terms of fundamentals. It has great fundamentals. And then you use technical analysis to find the optimal buy point to get into the stock, the optimal entry point to get into the stock. Right now, the stock is extended. So what we're going to have to do with AMD is we're going to have to wait until it pulls back a little bit, possibly to this red line here, and that is the 40-day moving average. So what's going to probably happen is going to pull up, and then it's going to pull back down, and it's going to settle on one of those lines. Now, I'm moving it over to the daily chart here, and let's see if we can. And what I'm going to do here is I'm going to remove some of the comments that I've made on this. What we want to have happen with AMD is, you see, it's pulled up. What happened is it pulled down below the 10-day line, and then immediately when it hit it, it moved back up. Let's see if we can get it to test the 21-day line. Now it tested the 10-day line here once. It's tested it twice. I think that it's going to pull back, and when it does, this is probably the best place to buy. This is the best place to buy at about 137.39. Now we're a little bit up. We're a little bit above that. So I do believe it's going to pull down. It's going to touch this 21-day line, and at that point we can buy it. But right now the stock is extended, so we want to be careful. I wouldn't buy it today. I do think it's probably likely to move and test a little bit lower. But that's a great question, and really appreciate it. Peter, let's take a look at SoFi, which is another great stock. We're coming up with some very, very good stocks. This one isn't as good of a chart as AMD, but if you've been watching my little analysis of AMD, maybe this one will make sense. If you'll notice, this is a cup base. It came up here to this buy point. The buy point on this one, on the cup and handle, was at 21.77. Now, it moved past that, and then all of a sudden, it went all the way up to 21. But then, once it started to move downwards, it fell below that resistance level, that buy point right there, that buy point, and it's fallen, and it's continued to fall down to the 200-day moving average. Now the question is this stock in an uptrend or a downtrend? Well, look at this weekly chart. It's a very interesting chart. We can take a line and we can draw it right here, and this is the reversal line. So currently it's below that reversal line. So what I'm going to do is I'm going to set a reversal line here. So if it pulls above about 23, that's where I want to possibly look to buy. Because you can see how it trades. It comes up, it peaks, it comes up, and now it's going to come up, and then hopefully it'll move past that and move up. But right now with SoFi, you can't buy it. It's not at a position that is a good place to buy it. So, basically the situation is that SoFi is not viable currently. It just not, and that's really, that's really the long and the short of it. It's not viable currently. Great question though, but it is not viable. Let's take a look at some of the questions from TikTok. Thanks everybody. Thanks everybody. All right. What are we talking about right now? Sorry, just joined. Great question. Basically, what we're talking about is we're talking about buy points on a number of stocks that, and I know you just joined here, so it's kind of confusing. I'm not running the charts here because of the way TikTok works, but go to this address. Go to this address here, and you'll be able to see it on YouTube. And on YouTube, I'm showing all the charts and everything. You'll be able to understand exactly what I'm talking about. It's a little confusing. It's a little bit confusing. Hopefully, I will technically be able to do that in the future. Let's look at the question from that Ali has put out. Well, he's interested in LVGN. So let's look at LVGN and see if it's not coming up. I'm surprised. LVGN. So I'm surprised on that. Anyways, let's take another question from Mark. Bought so was thinking would exercise contract maybe it's not a bad idea. We did. Sorry. There we go. Let's look at SLV. Sorry about that. Yeah, SLV. And by the way, everybody, I am taking. What I'm doing, of course, is I am looking at the. I'm looking at it as it's using the symbol, the stock symbol. Now this one is an ETF. It's the iShares Silver Trust. A lot of people have been, of course, very interested. And I want to cover some Bitcoin and some gold here right before we wrap up. But silver, everybody says, when there's inflation to buy silver. I'm not so sure that's right, because unfortunately, right now, this iShares Silver Trust is underperforming. Right now, it's underperforming the market. So that's not something we like to see. That's not something we like to see. Let's look at the monthly chart for this. Really, as you can see, this really peaked, this iShares, and this should be going great because with inflation, you would think that would be the case, but it hasn't been the case. So basically, this peaked at about $26 a share back here in the beginning of 2020. So right now, unfortunately, we are in a downward trend on this long term. It's not much of a downward trend, but it is a downward trend. So here's the thing I would say about this one. I would avoid this one. I would avoid this one because we're moving lower. But you might be interested in another one. This is, of course, not gold or silver. This is about Bitcoin, and there is a security called the GBTC. It is the Grayscale Bitcoin Trust, and what it is that it is about 4% of the world's Bitcoin. And I have traded this one successfully. It's currently not in a viable position, but I'm getting interested once again in this one because it's starting to get support at the 40-day line. So currently, the Grayscale Bitcoin Trust is 46.42, and it's close, relatively speaking, to its all-time high, which is basically up here at about 57. If this can reverse, we probably are going to see this move above 57 by the end of the year. Now, currently, the relative strength is 93, so it's very strong, but the trend right now, of course, is downward, the very short-term trend. But let me show you this, and this is a very interesting thing, and I think I was explaining this to my intern this morning. This red line here is the 40-day line. The black line is the 200-day line. Whenever the 40-day line moves above the 200-day line, this is called the golden cross. So this means that there is an upward trend in the Grayscale Bitcoin Trust. So if you're looking for some shelter from from this inflation, which is coming. By the way, it's coming. This is one that you might want to look at. It's not an ideal buy point right now. I'll admit it. It's just not an ideal buy point, but it does look like it's getting and bouncing off the 40-day line. So this is when you might want to look at GBTC, Grayscale Bitcoin Trust. And I definitely like it. And it's a good, I think, rather than gold and silver, why not try some of this? Because I think it might work really, really good. Really good. LVGN, let's see if I can bring that one up. We're almost at the end of the time. We're about a few more minutes. LVGN, no. Okay, no. Unfortunately, I can't bring that one up. So, boy, that's not helping. All right, let's take some questions. Last two questions from TikTok. I can't see the lines. The reason that you can't see the lines here, and I'm trying to be very clear on this, I can't broadcast the charts on TikTok. So you have to go to this address to see what I'm talking about. Unfortunately, I don't have the technical capability of running it. Let's look at PayPal here and see PYPL. And PayPal is just looking very sad. It's just looking very, very sad. We have this on the weekly chart. It is pulling lower, and it just right now is just not looking good. Relative strength is 11. Boy, I think that probably we're going to see some support right about here. That's my guess. And here is about 124. So I'm afraid, at least for right now, PayPal is pulling lower. So you just can't, right now, you just can't own PayPal. So right now, PayPal just isn't, PayPal just isn't where you can own it. Unfortunately, it's a great company, but PayPal is not at a place where you can own it. So the problem the problem is we can't own PayPal because it's in this downward trend. And with the downward trend, you don't want to buy anything as it's moving a downward trend. Now, we just previously talked about what they call the golden cross, which is the 40-day line moving above the 200-day line. This is this black line here. But this is what they call the death cross, where the 40-day line crosses below, and I want to show you that, below the 200-day line. This stock is being sold off right now. PayPal is being sold off right now. I can just tell you that based on this chart. And unfortunately, that with the death cross, it's going lower, at least for right now. So, for right now, PayPal is going lower. And for now, and it's not, it's not, it may turn, but right now it's just going lower, and you don't want to buy a stock as it's going lower because you don't want to catch a falling knife. So right now, PayPal is going lower. I would avoid this one, and it just doesn't work. It doesn't work right now, unfortunately. Well, everybody, thank you very, very much. I hope that everyone is going to have a great a great Thanksgiving. I know that I am, and I won't be back on Friday. I'll be back on Monday. I'll be back on Monday. With the show, and until then, everybody, I hope everyone has a great holiday. But get this up here. So no show on Friday. See you on Monday. at 3:30 p.m. So I will see you at no show on Friday. I'll see you back here on Monday at 3:30 p.m. So happy trading, everybody. Thanks everybody for dropping by. Please, consider liking this. But I definitely need this to get it out to more people. So consider hitting that like button. Consider hitting that. Appreciate it. And also possibly signing up for the and also sign up for the action trade alerts at www.Dow's Trading Floor. And I will see you back here on Monday. Happy trading, everybody, and have a nice Thanksgiving.